Well, if the U.S. government last year bought over $400 million in silver. If they need silver, they're just going to pay more. They're not going to not have silver for drones or data centers or whatever. They're just going to pay more. They're going to outbid everybody else. The more industry buys silver, the less silver bars and coins are available for investors, which means there's a supply crunch.
Beyond the market mirage, every headline screams. But behind the noise, a quiet revolution in wealth preservation is unfolding. In The Golden Hedge, learn how the most prepared investors are using strategic diversification to hedge risk, amplify returns, and sleep soundly no matter what Wall Street does. Welcome to Streams to Impact, brought to you by Steve Tucker Capital. I'm your host, Dr. Allen. Most high achievers have mastered success, yet still feel boxed in by taxes, volatility, and limits of time. But there's another way, a path the ultra-wealthy have quietly taken for decades, where money works as hard for them as they do to earn it now. It's time to ride into the open range where your wealth runs free, your taxes shrink, and your purpose expands. In The Great Tax Escape, you'll discover how the affluent legally redirect taxes into appreciating income, producing assets, building freedom instead of feeding the IRS. Don't let another tax season pass you by. Your freedom story begins now. Just visit thegreattaxescape.org to claim your free access while it's still available. Now, take the reins and let's ride into today's conversation. The Golden Hedge, how strategic diversification turns volatility into victory. Just a quick reminder, all information shared on Streams to Impact is for educational purposes only. It is not to be construed as investment, legal, financial, or tax advice, nor as solicitation to purchase securities or participate in any investment product or opportunity. All investments involve risk, and you should always consult your trusted financial, legal, and tax advisors before making any investment decisions. When uncertainty rattles the markets, some investors panic and others prepare. Today's guest has spent more than 2 decades helping people do the latter. Collin Plume is a seasoned entrepreneur and one of the nation's leading experts in precious metals investing and tangible asset wealth preservation. As founder and CEO of Noble Gold Investments, he's built a reputation for helping clients safeguard and grow their wealth through disciplined diversification into secure, high-yield, appreciating assets. Guided by strong family values and a steady long-term vision, Collin believes that true wealth isn't about chasing trends. It's about creating protection, balance, and legacy that endures for generations. And today's, he's extending that mission to you. Collin is offering our listeners a free wealth protection kit titled Silver is the New Oil, which reveals how one of history's oldest assets is becoming a modern powerhouse for wealth preservation. You can access it right now at silveristhenewoil.com. Again, that's silveristhenewoil.com. Today, we'll explore how Collin helps investors turn volatility into opportunity, why physical assets still matter in an age of digital distraction, and what true diversification looks like when the goal is lasting financial freedom. Well, Collin, welcome to the show. We're glad you are with us today. Let's start off with your originality story. So, where did you start with precious metals as a cornerstone of your wealth protection? And how has your philosophy on diversification through precious metals evolved over the past couple of decades?
Yeah, so I think it started with my grandfather giving me some junk silver coins. That's really how it started. I was 7 years old, and he came over and he dropped a bunch of these pre-1965 silver coins, quarters, dimes, and nickels, and half dollars. And I just touched them and felt them. And he said, yeah, it shows 10 cents, but they're actually worth at the time 40 cents or 50 cents. They weren't worth that much more. Silver was much lower than it is today. And that was my first, I was like, wow, okay. And he's like, this is how money was. This is what money was. And then I didn't think too much of it. We talked about it. He gave me more stuff over time. Later in my life, I ended up in the insurance business, and I actually ended up in commercial real estate, which I thought I would do for forever. Had some health issues and ended up back into precious metals in actually working in precious metals. I needed something new. And so I got into precious metals and absolutely fell in love with this. This was end of 2007. And my philosophy on precious metals at the time was gold and silver are actually money. Fiat money, everything else we have, is a form of currency, but it doesn't hold any value. And if you look at over time, the last 100 years, it's lost 99% of its value. Even since 2020, the dollar has lost almost 30% since 2020. So if you had a dollar in 2020, it's worth 70 cents in value today. So I just felt like gold and silver were real money. And I got into it slowly. I started to work for a company. We started to offer it, sell it, ship it. People liked it. I could tell that they felt comfortable when they owned it. It was different because it's real. It wasn't a stock or a fund. So when you're doing something different, people like that idea of just owning it on their own. And so it just kind of grew from there. And then I just started to read, The Creature of Jekyll Island, and I started to learn about the Federal Reserve. And, I read, Ron Paul's books. And I was like, oh, this kind of, I understand what this is. I get it. This is all through the 2010 to 20. And it's just like, gold was kind of hanging around. But it seemed like when the government was doing any kind of serious money printing or creating a lot of debt, gold would do well. And so we had the same thing happen in 2020 during COVID. We were, obviously pouring a lot of money out there, and eventually it translated into gold and silver, really starting to go up. And then I started to learn just about the dynamics behind the scenes of why people are buying it. And so, yeah, it's changed my, for someone that owns a lot of investments too, I really realized that gold and silver are just, there's something they're going to stay. They're going to be in people's portfolios forever. And it's more of an insurance, I obviously, like, it doesn't pay a dividend, doesn't do some of the other things, but we've had, like, this year we've had 46% returns. Like, a dividend is irrelevant when you're making a 46% return, right? So there's a place for it. And so that's what I've realized, is that it's changed. Morgan Stanley CIO came out last week and he changed his allocation. He thinks portfolio should be 60% equities, 20% fixed income, and 20% gold. That I've never heard that in the 17 years I've been in the business.
No.
It used to be 1% to 2%. It used to be 3-4% maybe. So for them to make this big bold leap and say 20%, obviously the world's mindset around precious metals has changed.
Well, Collin, many of our listeners are high income professionals and entrepreneurs who they really excel at their careers, but they haven't yet translated that success into lasting wealth. And so what you're talking about here is really a totally and completely new concept to a lot of our audience. So what are some surprising uses of silver that most people overlook, and how might those uses help professionals begin to understand silver as more than just a shiny metal, but as a really practical tool for helping them to build their wealth through really stable assets?
Yeah, so since the Hunt brothers tried to corner the silver market in 1983, there's more than 10,000 industrial uses that have sprouted. Some are small, some medical uses could be smaller uses, but then there's massive ones. Solar panels, there's few ounces in every solar panel. Electric vehicles, there's silver in electric vehicles. Solar panels is one of the biggest new drivers. They say almost 11 or 12% of the silver consumption will be through solar panels. EVs are a part. Data centers is a big new one. Last 5 to 7 years, they need silver in those data centers. I think anything electrical, you kind of there could be a silver paste or silver component there. So there's a lot of those uses that continue to grow, and there's been a shortage. This year alone, they think there's an industrial shortage of 148 million ounces. So there's been a shortage of silver that is very consistent. And so I think when you look at that and you look at the uses that I mentioned, those are uses that are going to continue to grow. I don't think solar panels are going anywhere. I don't think data centers are going anywhere anytime soon. So I think you have to look at what's the future, and that's why in my book, Silver is the New Oil, I make the argument that oil's not going to be gone completely. I just think that if you look at the usage, and I talk about it a lot in my book, is it's starting to mirror a lot. So electric vehicles are taking away from gas, right? So, and silver is a component. So it's not replacing oil; it's just a part of the usage case. So that is a big part of it that I would look at. That's important.
Yeah.
And silver, a lot of times, is a byproduct of other metals. So there are silver mines, but a lot of times that they're mining for other things that are more expensive, and then silver is a part of that. So there's this idea that, as long as they continue to need it, it's still not the main thing that they're looking for because it's not expensive enough. And I think that's the benefit of silver, and sort of you could say is the negative of silver too, is that it's still cheap enough that they're not going to just only mine it like they are for gold and platinum and palladium. So it's kind of that secondary thing, but also it's an advantage as an investor because they're not spending so much money on mining, which means they're always going to be at a shortage of silver. Based on the trends for the next 5 to 10 years, there's always going to be a shortage. So then it's well, what do they do in a shortage? Well, if the U.S. government last year bought over $400 million in silver, if they need silver, they're just going to pay more. They're not going to not have silver for drones or data centers or whatever. They're just going to pay more. They're going to outbid everybody else. And I think so from a retail investor like me, I like that because the more industry buys silver, the less silver bars and coins are available for investors, which means there's a supply crunch. And that's been my argument that I make in the book, is that I think eventually when silver is above 100 or 200, there won't be that many bars and coins left because most of it will be used in industry.
Right. Well, yeah, I was really surprised, several years ago to understand, or to discover, I guess I should say, how much silver is really embedded in so many things that we don't even think about.
Right.
I was thrown off my horse several years ago, and she stepped on me and on my leg, and so I had this wound that would not heal, so I went into wound recovery, and one of the things they were putting in that wound for infection control was actually silver. Strips of silver,
a mesh, a silver mesh. Yeah, it's a very common mesh. Yeah, I'm sorry to hear that.
So anyway, learn new things all the time. But anyway, so yeah, it's just embedded in our infrastructure, and we just don't really even think about it. One of those kind of hidden things.
Yeah.
Well, Collin, for people who are new to investing really beyond their 401ks, hearing that silver just broke $47 an ounce might not sound particularly impressive, but they may not know why that is, and why is that milestone so meaningful, and what fundamentals really force the drive of the price of silver.
Yeah. Well, silver did break $53 also. In the last, it's been moving pretty quickly. So if you're not watching it every day like I am, you might have not caught it, but it broke 53. So 50 was the all-time high. It broke through that 3 weeks ago, and then it's sort of just been like rising. Um, I think the demand is, there's a few things what's happening right now that push the price. One, Russia and Saudi Arabia bought $150 million of silver for investment, which is the first time they've ever done that. And what I mean, why that's important is they both have silver mines. They bought this as a strategic investment, similar to why central banks buy gold. It was a big shift in the idea that they bought it and saying, like, we're probably not going to use this in industry. We just want it because it's a good investment. That was a massive move, sent a lot of shockwaves through the market, and it's a pretty significant amount of silver to take off the table. So that's the first reason I think that the price of silver. The government shutdown, I think, is giving people a lot of pause in the idea that some of the stock market or equity, they feel like there could be repercussions to when we open back up. And I've been hearing that a lot. A lot of people have been saying that to us, that they just don't feel like the economy is going to be okay. They think we're in a recession. Obviously, the indicators say that we're not as of yet, but we could be. I mean, unemployment does seem to be going up, and our GDP growth, if you have, negative unemployment and negative GDP growth for 2 quarters, you're in a recession, right? So I think a lot of the indicators out there that we could be coming into that situation. So I think a recession would hurt the stock market, and so people are trying to get ahead of that. And gold and silver seem to be deemed more of safe haven investments. So I think that's the other reason that we've seen this big push, is people are looking for safe haven investments in this current environment. And so for new investors that have never looked at it, they should look at some charts. They should look at some use cases of silver, of why it's gone up, what they're using it in. And I think the key to it is it's an unusual thing in that it's one of those things that if the usage continues to go up, what is the likelihood that the price goes down? Now, we could have a correction from 53 to 47 or 46. Sure, you could have any kind of sell-off. Anything can happen. But at what point is it so affordable that more central banks buy it or more institutions buy it? And there is a point of that. And I think, I do think we'll have some correction here somewhat, but I do think the sentiment today is that the downside is less, because people are going to perceive silver, even in the 40s, as having significant value long term. If anyone like you, I assume you're sort of a long term investor too. If you can see the writing on the wall that silver can hit 100 or 150 or 200, then even buying it today or in the 40s, it still has tremendous value as a way to just kind of tuck away a little bit of money there. What we do is the physical, which is unique in that you can actually get it. So for anybody that has all their money in the stock market, that's everything digital, we provide a way to buy gold and silver where you can actually get it shipped to your doorstep. And we can also do it in an IRA or like an old 401k, but it's physical. So it's not a digit. You're not buying a fund. You actually own the gold and silver yourself. And it's segregated storage. It's yours. So it's just a different mindset idea for people that want to have something that they own by themselves, because there's so few things we actually own by ourselves nowadays. Everything's like a part of something else, right? So
for sure. So yeah, this is new, and certainly. So viewers and listeners, Collin has prepared for you a wealth protection kit, and if you would like to learn more about investing in silver and other precious metals, you can go to his website, which is silveristhenewoil.com, and you can pick up his guide for free. So do that while that is still there and available. So, Collin, for most high-income professionals who excel in their careers, but not necessarily sophisticated, I would say, in financial matters, For these people who are new to alternative investing, what does silver's recent surge really mean? So you've gone into this a little bit, but is this the beginning of a lasting trend, or is it a short-term market noise? And like you said, it might adjust down to 40. Do you have any indication as to when that might happen? How long is it going to stay there before it surges again? Any way that we could, as new investors in this, have some confidence that if we buy today at $53, that in the next 5 years, it is going to at least sustain itself, but hopefully it's going to increase in value.
I mean, I will say if I was that smart, I'd be not a millionaire, I'd be a billionaire. I mean, I think I take a very seasoned approach, and to say early, like how you set this up, I think your audience is to be successful. They're already successful. They're already high net worth. It's really just a change. The idea of like thinking about what your money and what your investments can do is just it's a mindset shift, and it doesn't take as much time. But I think people will be amiss if they don't do it as soon as possible, because I talk to so many people that are in their 60s that could be worth, 10 or 15 or 20 times if they just spent the time to think about what they're, because, if you're really good and you're making there's a few small changes, a few extra percentage points in return a year is massive over 10 or 15 or 20 years. And so I do think it's important to do that. But I would say just, the thing that I say about when people are interested in gold and silver, I cannot predict what's going to happen. Um, I felt like when I wrote the book in December, silver was sitting at $29 an ounce. I felt very comfortable there. I still feel very comfortable in silver just because I see the demand.
Mm-hmm.
It's really a function of demand, right? If people are continuing to buy, then the price will continue to go up. I know there's industrial demand. There's 10,000 uses since 1983 that have popped up. So I know that there's industrial demand too, but I don't invest looking at like what's going to happen now. I go, if I can double or triple an investment in a 5 to 7 year period, that's what I'm looking at. So I don't look at year to year. I look at like in this 5 to 7, is this something that I could really hang my hat on? Can I make a 14 to 18% return over the next 5 years? That's what I try to accomplish with all my investments. And I think that ultimately it really comes down to, if you think our government debt, if you think that things are going to get better in our economy, and if you think that we're going to figure things out in terms of the dollar, then I would say gold and silver might not be the best place. If you want some insurance against overspending, fiat money, government debt, if you're looking for that insurance, gold and silver are that. And I'm not just saying this because of me. I'm saying this because this is what central banks are deciding to do. Like, central banks have bought 1,000 tons of gold for 4 years in a row. It's never happened. So they're buying this year. Right now, they're a little below. I think they've been buying about 65 tons a month. So they're down about 15% from that normal 1,000 tons. But I would say that they're buying gold and putting it in their reserves because they believe that it's an asset that they should hold. And so I just look at that and go, well, if they're doing it, they can buy anything, right? They can buy any asset they want. There's some reasoning behind it. I think silver is the same thing. But yeah, I mean, the silver market can easily be manipulated in the short term. We saw it in 2011 when they changed the margin calls and people lost a lot of money because they increased the margin calls in 2011 and it pulled back. But what I think is going to happen is I think the government's going to do quantitative easing in the next 6 months, or I think they're going to do it when the new Fed chair comes in May. And I don't know who the Fed chair is, Scott Bessent or whoever he decides, but I think they're going to be very aggressive. I think President Trump's strategy is growth, growth, growth at all costs. And I don't think he's concerned about debt. And I think if that's the agenda moving forward, then I think that gold and silver should do okay. If we had a little bit less growth strategy, more paying down and trying to get our debt in line, I think gold and silver would do a little bit less. But I just don't imagine. I don't see that in the forecast in the next. We're spending $7 trillion, or give or take, Alan, a year. We're bringing in $5 trillion. We're losing $2 trillion a year. So until that shifts, dollar's going to lose value. Confidence in the world. China's going away from the dollar. They want to get away. All the advantages that we had in the in the '70s with petrodollar and all the stuff that we created is all kind of evaporating because we've gotten too much debt. So I don't know 100%, but I think a high growth, high debt strategy usually would benefit a limited supply item that's needed.
Yeah, I mean the debt structure was actually designed back in the 70s intentionally because we were really outsourcing our debt through international trade,
right?
Through the dollar being the currency of international trade. That is shifting. Not only is China shifting away from that, but really most of the world is. And very few people in the United States are even aware of that shift, but it is a galactic shift, and it is the way we've been paying our debt is evaporating, and I totally agree with you that Trump, and it isn't just Trump, it's been every administration since the 70s.
True, yeah.
Think the way to run the world is to put everybody in debt and then have them pay for our debt through the exchange rate. And that magic pill is evaporating, and I don't see anybody in Washington paying the least bit of attention to that. So yeah, I think that's why the central banks are purchasing gold and silver. So that sounds great, except the central banks are holding all of this gold and silver. What if they just decided to dump it all in the market at one time? What would that do?
Yeah, no, that would be the big concern. I just think that it wouldn't benefit them to do it because they can do so many things with gold. For instance, one of the things that after World War II is that Germany had a lot of their gold here. They've tried to repatriate their gold and they want it more close to home now, partly because of our debt crisis and their concern. But a part of the reason that gold is a great asset for central banks to hold is because they can leverage against it. They like it when they do big trades. They can use the gold, so it doesn't really benefit them to sell that. Silver, same. I think it's hard for them if they need an industry, and if the 148 million ounce shortage continues to happen, it doesn't make sense for them to sell the silver now because they're going to need it eventually in the future. And there's things with silver that are interesting. Like one of the things that I always bring up is that in most refrigerators today, there's 2 ounces of silver. And it's only really important if you think about, and this is a great thing to think about with silver, is that nobody's going to dive into that dump to pull 2 ounces of silver out because it's not enough money, right? It's $100. They're not going to go in there and do that. It would probably be hard to distract them. If that was, a tenth of an ounce of gold, they would do it. They would do it. Be $450, $440. So until silver becomes valuable enough that the recycling makes sense, a lot of the silver is never coming back onto the market. And so that's, it's only 5 to 6% of the silver gets recycled, whereas it's a much higher percentage with gold. So I think there's little things to think about there too. Obviously, like in data centers and drones and all these things that have silver, most of that's not going to get recycled. So we are going to continue to have these shortages until we've created a mechanism or a system where recycling is easier or it makes more sense as a business, right? So those are things that I think to keep in mind when you're like, oh, well, silver, the price, what, they'll just find more. It's not, but they're not recycling that much that's above ground. You're seeing the U.S. do all these deals with multiple countries over rare earth metals. I mean, we've seen a bunch of these deals happen over the last 2 to 3 months. Rare earth metals is a big part of China's strategy and other India and a lot of these countries. And yes, gold and silver maybe aren't as rare as rhodium or some of these other things that they need, but it is rare to some extent. I mean, there's only enough gold in the world to fit in 2.5 Olympic-sized swimming pools, so it's not readily available everywhere. As much as we see videos of Dubai and all these things, it's still a small amount. So I think that's the problem with them dumping it all on the market, is that they would just dump it. and Great Britain did this, actually. One of the biggest central bank blunders in history is that Great Britain sold 60 or 70% of their gold in 2001. And literally gold went from $280 an ounce to $1,900 an ounce. And they just had to come back in at some point and buy more. So they dumped it all at 280, and then they were buying it back at 1,200 or 1,400 or 1,600. I don't think anybody wants to have that happen again. And it's so ironic, the place that has the jewels, like the royal, like a place that like is kind of seen as like gold, right? I mean, that they sold at the worst possible time. So there's certain things, certain assets you probably should never sell. And I think gold and silver are those. You only sell it when you have to. People that are selling with us today, the common sentiment is like, I wish I didn't have to sell, but they need it for life. They need it.
Or whatever. Yeah.
And we do that too. And that's part of our service in Noble Gold, is you can always sell the metal back to us. We'll get the money back to you quickly. If it's an IRA or direct, whatever, we do all that. That's included in our service. And that's the thing that people should keep in mind when they're buying, is you definitely want to have a two-way street with whoever they buy from, because, a lot of people are like, oh, I'm just going to buy from Costco. And it's like, okay, well, will Costco buy it back? It's like, no, they won't buy it back. So then what do you do?
Right.
Who do you sell it back to, right? You want to have a two-way street relationship with buying and selling with somebody, so that when the market goes up and you need it, you can sell it and get your money out quickly. So, these are things to keep in mind when you're considering buying a physical item like gold and silver.
Well, Collin, it's been wonderful being with you here today and very enlightening. So let's close this out with one final question. For those who are listening, who are ready to stop relying solely on earned income and traditional 401ks and so forth, what do they need to do today to take advantage of silver's current momentum in a safe, strategic way that builds real wealth instead of just speculation? So what's step number one?
Yeah, so the first thing would be just call Noble Gold Investments and talk to a live person and get all the information and ask a million questions and spend time with somebody, a real person here in the U.S. that owns gold and silver, that understands this, and check out our company, Noble Gold. Check out our reviews. Check out what people are saying about us. We really pride ourselves on that relationship. And we know that it's important, that an investment like this is important, and we spend time with you and we're not going to rush you. Those are the things that we really focus on. It's a family business. I own the business. I'm a family man. I have 3 young kids, married. Like, I'm involved in this every day. So we want to make sure that you're satisfied in what you're doing with us. And so I would say just give us a call and let us send out some information, build a relationship, and see if it makes sense, for you.
What's the phone number, Collin?
877-646-5347.
And that information will also be in our call notes. So thank you, enlightened investors, for being with us today. And we'll see you in the next episode. What a powerful conversation with Collin Plume. His insights remind us that real wealth isn't built in reaction to the markets, but in preparation for them. If you'd like to learn more about protecting and growing your wealth through secure, appreciating assets, be sure to claim Collin's free wealth protection kit, Silver is the New Oil. You can access it right now at the website silveristhenewoil.com. And remember, if you're ready to take the next step toward reducing taxes and building true financial freedom, visit our website, thegreattaxescape.org, to start your journey today. Once again, that is thegreattaxescape.org. Until next time, I'm Dr. Allen, inviting you to keep your wealth running free and your purpose expanding right here on Streams to Impact.
Thank you for tuning into Streams to Impact, brought to you by Steed Talker Capital, a company empowering passionate professionals like you to develop multiple streams of passive income built on solid passive real estate investments. As a significant part of our endeavors to make a cosmic and meaningful impact for this world, Steed Talker Capital contributes significant portions of our profits to activities and organizations committed to better understanding the equine. These endeavors attempt to enhance the treatment of horses worldwide. Steed Talker Capital, working for a world where all creatures great and small flourish abundantly. If you are ready to learn how our passive investors have earned an average 33% annual return on their investments, schedule your complimentary passive income to Prideful Impact consultation. Obviously, we cannot continue indefinitely to offer these valuable consultations for free, so grab your passive income to Prideful Impact consultation while you still can. Go to steedtalker.com/passive